Hello everyone, welcome back to the channel, hope you're doing well. Today we're going to have a talk about some big news that's shaking things up in the car finance world here in the UK. A recent Court of Appeals ruling has had ripple effects across the car market, and if you're thinking of financing a car, or if you're a dealer relying on finance deals, this news could impact you. Let's talk about what's happening, why, and what this could mean for car finance going forward. So let's start with the basics. Recently, the UK Court of Appeals ruled in a case that changes how lenders explain commission payments to customers. This ruling makes it more challenging for finance companies to simply reject customer complaints about unfair terms, sales practices, or unexpected fees in their agreements. Now they're under pressure to ensure these deals are more transparent and fair, and if they aren't, the repercussions could be severe. Judges have decided to allow an appeal after a ruling that a broker could not lawfully receive a commission from a lender without obtaining the customer's full informed consent to the payment. The judges, who unanimously voted to allow the appeals, said that motor dealers acting as credit brokers have a fiduciary duty to their customers. This case was brought against three different lenders, one of those being Close Brothers. And in a statement, Close Brothers said, "Close Brothers disagrees with the court's extension of the existing case law in this area and intends to appeal this decision to the UK Supreme Court. The court has determined that motor dealers acting as credit brokers owe both a disinterested duty and a duty of loyalty, fiduciary duty, to their customers. This sets the bar for disclosure of consent to the existence, nature and quantum of any commission paid higher than that required by current FCA rules or regulatory requirements in force at the time of the case in question. While the judgment is likely to extend the current period of uncertainty for the group, we will continue to focus on supporting our customers and protecting our valuable business franchise," the statement added. "We will be temporarily pausing the writing of new UK motor finance business while we review and implement any relevant changes to our documentation and processes to ensure compliance with these new requirements." Now, in the hours after the decision was made public, Close Brothers' share price fell from 365.40 pence to 285 pence, before recovering slightly to 318.6 pence at the time of writing. As you can imagine, this ruling has finance companies scrambling. Many are now reviewing their entire agreement structures and sale practices to make sure they're not leaving themselves exposed. And because of the ruling, some lenders are taking extreme steps. For instance, we've seen a few major companies like Close Brothers, Motonovo, and even Honda deciding to pause new retail finance deals altogether while they assess their options. Honda are even delaying handovers of new cars while they assess their agreements. This has left dealers in a tight spot. Car dealerships rely on finance companies to help their customers get approved for vehicle loans. Now, with some lenders pulling back, it's creating a lot of uncertainty, both for dealers who rely on finance deals to close sales and for customers who are looking to finance a car but might be facing limited options. I think it must be a very worrying time for some dealerships that rely on finance commission in order to make profit. If you think of the car supermarket model, where cars are priced keenly and sometimes sold for a minimal profit, as they're relying on the commissions and their add-on products. Some dealerships are turning to alternative finance providers, but there's a sense of unease across the industry. Of course, as I always say, in every scenario, there is an opportunity for some. And I've spoken with some brokers who have had a huge increase in new business as dealers and consumers are struggling to find finance via their usual options. So what does this mean for consumers? Well, on one hand, the ruling could lead to better terms and transparency in finance agreements, which could be a big win for car buyers. However, on the other hand, we might see stricter approval processes, higher deposit requirements, or even higher interest rates as lenders look to cover their bases. I actually had a case this morning where a customer wanted to finance a 2011 Land Rover we have in stock. Now, usually Close Brothers were the company to go to for older cars, as they would lend against older cars than most, but obviously they're not doing any new business at the moment. So this means that the customer could face either a much more expensive option or just no options at all. So